Now, merger and acquisition activity, it has been on the rise since last week. Joining us now for more, an expert's point of view, we have Robert Profusek. He is the global head of M&A at Jones Day. Robert's most recent deals include representing Continental Airlines in its merger with United, as well as Tech Mahindra and its acquisition of Satyam in India. He's currently representing Potash as it looks for bids to compete with BHP Billiton's $39 billion offer. Good to have you with us on Bloomberg.
Nice to be here.
So what is the reason for all of this merger and acquisition activity now? Is it just that corporate balance sheets seem to be flush with cash, or is it that companies are looking to other places for growth?
Well, I think it's a combination of things, like all market dynamics. M&A is not a fad. It's a permanent part of the corporate landscape. But when we have a tremendous break like we had post-Lehman and the financial crisis, all that stuff came not to a halt, but very, very dramatic drops in activity. In the meantime, you get pent-up demand, so to speak, as that happens. Some of it is that. A huge part of it, I think, is just where we are. It's part of the Wall Street story, the equity story. Low growth rate, maybe 2.5% GDP. Well, how do you get growth if you're a corporate strategic party, other than acquisition synergization, which means get the same revenue but at a lower cost basis? And the last factor, which just sounds a little bit goofy when you first think about it, is one of the things about the financial crisis is that the gestation period for deal making has elongated. People are spending more time looking more carefully, making sure they're not making a mistake. Both not due diligence and all the rest of that. That's always been done carefully. But if you're a CEO, you don't want to go in front of your board unless you're darn sure that this is something that makes a lot of sense. So the process is stretched out. I think what we're seeing this August is what, in a pre-Lehman environment, we would have seen in May or so, given the market dynamics. And I guess the last factor is there is a tremendous amount of money. S&P 500 companies have almost $2 trillion on their balance sheets at June 30. The corporate bond markets are fabulous right now. The high-yield market has come back.
Well, you had Norfolk Southern coming out with a 100-year bond deal today.
Right. The high-yield market has come back after the Greek and all that stuff blip we had. And while I'm not going to talk about Potash for obvious reasons, but you know, they have a bank credit facility for $45 billion. There hadn't been anything like that since the take-private period of the 06-07 period. So it's a combination of all of this stuff. But I think in large part, M&A is a permanent part of corporate strategy. And it stopped when Lehman went down. Everything slowed down. Companies like consumers got conservative. They paid down debt, build up cash, and now what do you do? So you got to start supporting that PE multiple.
All right, so if you're going to focus on that area of the strategy, how does cash flow and buying free cash flow when you're looking at potential companies, how does that factor into it? Because it seems as though a lot of the, whether it's Intel or McAfee, you're looking to get something that's already doing very well and that's going to be accretive to the company's performance.
Well, the corporate buyer has one thing that the private equity buyer doesn't have: synergies. You buy a company, you can reduce the cost structure, you can bring other things to get revenue synergies, although people don't make too many bets on revenue synergies, but you know you can get cost synergies. So if you can fit the same business in a much lower cost structure, you increase the margin, you increase profitability, and you make an accretive transaction. Some deals we've seen which have been a little bit, you know, this is a little bit more edgy. We've seen companies, big companies, do some dilutive transactions where, you know, they say, well, you know, this is going to be a dilutive deal. The most significant of which in the last few months would be XTO being purchased by Exxon. Shareholders didn't like that. You know, the stock was punished. You know, Exxon saying, look, this is strategic for us. We need
getting
gas.
into the big natural gas business.
We need gas in North America. This makes a lot of sense. And Exxon, being Exxon, they're willing to do it. A smaller company trying to do a dilutive transaction, Charles River a couple weeks ago, shareholders said no. And basically they had to pull it and pay a big
You got to listen to the shareholders.
Yeah, that's right.
All right. I want to thank you very much, Robert Profusek, coming in as the head of M&A at Jones Day, giving us some insight into all of this mergers and acquisition activity. I'm sure you're going to be, or coming up in the future, a lot. All right.